Welcome to this money marketing roundtable on a potential COVID-19 wealth tax and its implication for financial advisors. My name is Michael Klimes, and I'm the pensions reporter at Money Marketing, and I'm joined by a wonderful group of panelists to discuss this very important topic. And I will just quickly hand over to them for them to just introduce themselves briefly.
Hi, my name is Amyr Rocha-Lima. I'm a partner at Holland, Hahn and Wills. We're a financial planning and wealth management firm based in Kingston upon Thames, and we specialise in retirement planning.
Hello, I'm John Cowan. I'm the chairman of Sesame Bankhall Group. It's a network of advisors on one hand, and the other side, Bankhall, we support service company to financial planners. We're based up outside Manchester.
Hi, I'm Kusal Ariyawansa. I'm a chartered financial planner at Appleton Gerrard. And nowadays my main role is intergenerational wealth planning with the clients I look after. And I'm based in Manchester.
Hi, I'm Tony Wickenden, Managing Director of Technical Connection, long-time contributor to Money Marketing, too many years, probably, too many words. And I think Michael's asked me to say a few words to start this subject off. Is that right, Michael? Shall I just go straight?
Correct. Absolutely. Just set the scene for us briefly, please.
So I think, well, why we're talking about this, if I understand it correctly from you, Michael, there was an FT article a couple of weeks back, which followed up on an earlier FT article based on a survey run amongst FT readers, 1,300, so relatively small sample size. And I think it's important to give that context to this because small sample size, if you read the 457 or something comments that readers, I always find the readers' comments to the FT really interesting. But you got some really interesting sort of comments on that, on who were those 1,300, were many of them students on free subscriptions, all of that. We don't know the nature of those, so we need to see that survey for what it was, but it said roughly 50% were in favour, roughly 50% weren't in favour, which more or less reflected a kind of YouGov or Mori Ipsos poll. So that was the background to that. And then we're talking about it, of course, because it keeps coming up, doesn't it, in the conversations around government debt and that big question, well, how are we going to pay for it? For God's sake, it's billions, and it is. And when we have 55 billion, just doing a bit of history, 55 billion was the predicted public sector borrowing requirement for this year, and everyone gasped, went, wow, because we're going to level up and we're going to spend on infrastructure. And there was a, listen to this, there was a 12 billion special one-off injection to help with the economic impacts of COVID in March. 12 billion. Okay, so then we got to the summer and the borrowing had jumped to 372 billion. So that was because of job support scheme, job retention scheme, self-employed income, all of that. And we'll get the financial statement on the 25th of November, I think, and it's predicted it's going to be 400 billion. I think the important bit is the relationship between debt and GDP, and it's about 100%. But we've been there before. It was 250%. when we had the war, and it's gradual. So I think the point is, I think we don't need, my view is, we don't need immediate, massive, draconian tax increases because we can afford the debt. The International Monetary Fund, the MD, very relevant this, the managing director of the International Monetary Fund yesterday in the FT was encouraging economies to keep on supporting their economies, encouraging countries to keep on supporting their economies through the pandemic, and then further stimulate post the pandemic, and after that get their public finances on a stable footing. And Rishi Sunak sort of came in and said, see, that's what I'm doing. Basically, that's why we pushed the budget back. That's why we're not doing anything now. So all of that. So that was I think it's the background with people, well, we've got to pay this back. I know, what about a wealth tax? You know, because there's either increased rates, don't spend as much, so we're not going back to austerity, I don't think, increase rates, or have a new tax, a special COVID tax, because we all know the whole thing of we all want to help out. It's like the financial version of clapping, and just so let's do that. And Manchester Metropolitan University did this little academic study, which was really interesting. It said, if we had 2% on everybody's wealth, that would be about 300 billion sorted, basically, except that we don't need to do that. And yeah, how are you going to get the money? And then that leads to the the many questions around wealth tax generally and our experience of it in the world today and in the past and the challenges we've had. So I'll stop talking now, okay, and I won't stop for the rest of the time, but I'll throw that back to you, Michael.
No, thanks a lot, Tony. That's a really great introduction to a topic with some good numbers. Some questions I think which can underpin this discussion, which we can begin to unpack now, are questions like: should there even be a wealth tax? What assets would you include if you wanted to introduce a wealth tax? How would you value the assets? And how do you collect the tax? And then going into more granular detail, what could advisors actually do to help their clients prepare for one, if it indeed does materialise? So on the first one of those, should there even be a wealth tax? Do I have any takers?
Michael, I think, in the main, this is a personal bias. I'm not a big fan of wealth taxes, although, as I'm sure Tony will agree, they're part and parcel of our economic life. I mean, if you think about it, the council tax on your home is a form of wealth tax. The bigger the home you have, the bigger the amount of tax you're paying on that. But it's really hard to define wealth. That's the problem, right? And depending on how you define it, it sounds like you're penalising people who have been successful in life. And if you look at the UK's stand on its economic policy, or probably it's the most right-wing economic policy in Europe. Okay, it encourages capitalism, it tries to encourage innovation. But at the same time, I think there's some political manoeuvring that we all have to be sort of mindful of here, because, if you just put the cost of this crisis into the public debt and just try to say what Rishi is trying to say, which, look, we can afford this and look what we're doing, it sort of gives people this idea that, well, hang on a second, we're getting future taxpayers to pay for all the benefits that we've been able to enjoy through the government support today. Does that discourage future entrepreneurialism and innovation? I don't know. So I think that there's two things here. There's the wealth tax, that today is just speculation. And then there's the political maneuvering behind it to position it in a way where, as Tony alluded to, some studies show that the actual number, the actual percentage that we would all have to chip in, as it were, doesn't seem to be that big if it's spread across the whole population. But the messaging of this is going to be really important.
I think I'd like to say there's, if we step back a moment and say what tax for? If this idea of wealth tax has been kicking around for years, Tony, hasn't it? I mean, as long as you and I have been around, and we know there are already wealth taxes and inheritance tax, stamp duty and property. These are all effectively, and capital gains tax. These are all wealth taxes. So this one has taken hold because of COVID. People are saying, we've got national debt, we're going to have to pay it off. So I think we need to work out why we think about a wealth tax. Is it to deal with structural inequality in the country, for example? And I don't believe this Conservative government would really want, personally, I don't think they would want to do that. I don't think they would want to introduce a wealth tax to try and get a levelling up, as they've called it. So if there's going to be a wealth tax, what is it for? Is it targeted? Is it of a short-term fix, or is it a longer-term nature? And I think before this, we know that the Chancellor was looking into the Office of Taxation Simplification to try and look at inheritance tax and capital gains tax and bring some order to the whole capital taxes issue. My fear is that rather like the Manchester study, it's very popular to go after, inverted commas, the rich, isn't it? But the reality is it may not yield very much. So I think we need a much more mature and sensible debate about this. I don't believe that, my last point is with you, I don't believe the point about we could just parcel up this debt and like the Second World War, we kind of work our way through and perhaps inflation will take care of it. But that's like generation. So I think there's going to have to be something that tries to tackle it, but I'm not quite certain how he'll do that, other than we'll get to some of the potential options available, whether it's around pensions or capital gains tax.
Okay. Kusal, what about you? What are your thoughts?
In quite simple terms, no, there shouldn't be any further wealth taxes. And I think the analogy to draw here would be if we compare the Manchester study to the Manchester Football Club, Manchester United. They have ongoing internal issues, and they have tried to throw money at the problem. and it has resulted in massive wastage, with the end result being the same, inconsistency on an ongoing basis.
Mm-hmm.
You look at Liverpool, who are champions, they started with that model, they changed that, and they became highly prudent and became very targeted and only bought based on a set formula. And they're profitable, and you can see their net spend compared to the others and their success. That matches nicely. The problem we've got here is that historically and consistently, politicians have failed to spend money wisely. It is amounting to consistent wastage, and it is not right to tax people who are successful to pay for their wastage. And I'll give you a prime example of something that is a complete waste of time, and that is our nuclear deterrent Trident. We are not going to get nuclear attacked, especially being part of NATO. It is a complete waste of time. It is going to cost 205 billion to renew it. Yes, I believe in the armed forces, I believe in protection, but we are not going to get a nuclear bomb on us, and a deterrent isn't going to cause anything. So they're immediately something to look into. We just have this ability to waste money. So if we can prove that we're not wasting money, we are directing it to actual meaningful causes where there's a direct impact, people will want to contribute more. The problem is at the moment, they're being taxed, and where's it going? Mm-hmm. The PPE contract is a classic example, that the app, 12 billion on the app. There's wastage.
I have a sense from the panel that on the first question, should there be a wealth tax or not, everyone seems to be pretty unanimous, at least philosophically, that there should not be one.
I'd certainly, and for my part, I would certainly agree with what Amyr and certainly what John said around being clear about what the purpose of this is. You know, we do have that throwing down to the next generation, something to, if we can, you know, we all need to contribute. Definitely, it's only fair. But that, what is the purpose? Is it confiscatory? Is it to get money in? You know, what is the purpose for it? And let's be clear about that, rather than just being seen to be doing the right thing from a political standpoint. Really, really important, that, because if it is to get money in, and all the rest, all the points that John made, and I would certainly endorse, around how much it actually produces. You know, by evidence, in the countries where there is a wealth tax, and there are only 3 in Europe where there's a true wealth tax. It's Norway, Switzerland, and Spain. It's a tiny, tiny proportion of the overall, and it costs so much money to administer. So in terms of that whole spend, you know, if we're going to do this, is it wasting money and time and effort that could be better directed anywhere else? And it's not being selfish and going, oh, I don't want to pay it. But there is that point, isn't there, when people contribute to surveys, they generally support something that is not going to affect them. Generally speaking, that seems.
Tony, one of the advantages of getting older is that you remember things like Dennis Healy talked about squeezing the rich.
Exactly, in 74.
74, yeah.
And he did agree. He had a green paper on that.
He said it took 5 years and eventually abandoned it because it was going to cost more to raise the money. That's not. I would say, to
Kusal's point, I hope Manchester United's inconsistency on the negative side continues right through till Sunday evening.
It's interesting though, Michael, because I think just as importantly, I mean, if you surveyed us with a slightly different question, perhaps, and you know, because a wealth tax doesn't necessarily need to be about taxing assets, for example. And I think it was HMRC that has put out a study saying that even a single percentage point increase in the basic rate of income tax, so from 20% to 21%, would raise something like 4 or 5 billion pounds in 2020, 2021. So, you know, if you position it in a way where, look, we're all in this together, this is the crisis, and we need to chip in with an extra 1 percentage point increase in your tax rate, Mr. or Mrs. Joe Average, I honestly don't think there would be much uproar. So again, there is an element of political messaging here, and it goes back to John's point. You clarify and exemplify what this is for, and then you show that the impact on each individual isn't that much. I think it becomes more palatable that way.
Yeah, definitely. So, I mean, we've got the triple lock to deal with. Unfortunately, when you see the majority of tax comes from income tax, NIC, and VAT, and they're the 3 things in the Conservative promise, the manifesto. I mean, I don't think anyone would really get too upset if there was another U-turn and they said, actually, things have changed. But that's a great point, because it's shown a small amount from a greater number gets you much further. I think it was 1p on income. To get the same that 1p on the basic rate would have to generate, you'd have to put 4.2p on higher rate and 28p on additional rate, and that's where it starts. You get to that point, don't you? You know that American economist Arthur Laffer, with that point you can increase the tax rate to a point where the revenue starts dropping, even though the rate's going up, because people change their behaviours. You know, back in the day, brain drain, all that sort of stuff, said I'm not staying here, I'm going, basically. Yeah.
So it's almost taking us to the point of what these options are, because it's because he's got to balance it against keeping the economy going, and going, of course, and not depressing it. So he's got to be careful with VAT and so on. So there are obvious things he can go after, like the triple lock and pensions and so on.
Because if you get the money, you know, if it is to get money in, then those are the three taxes where you will get most in, and aside from a one-off hit on wealth tax. But I think politically, to do a form of capital tax reform, both Amyr and John referred to, you know, just capital tax reform, the OTS are already going to look at it, and I think CGT, IHT, not that many people pay it, so you'd also wouldn't upset that many people. I think I'm Mr. Stato on this, just I did a bit of research.
How about a windfall tax on the banks? They're always a good picking.
That's always, everyone loves it. The windfall tax on the banks, yeah, definitely.
They're sticking their mortgage rates up at the moment, so they're due a bit of a slap.
Yeah, windfall tax on the banks and Manchester clubs. That's what I say.
Manchester.
That's your headline right there, Michael. That's your clickbait headline.
All great points, everyone. Does the context of COVID-19, though, we have this word bandied about that times are unprecedented. Does the context make a wealth tax or any potential wealth tax more or less likely? I'm just thinking of, for the fact, for instance, that slightly separate point, but we've got a majority Tory government, and nobody thought, and whoever would have thought that in our lifetimes a majority Tory government would have paid 80% of the wages of, what was it, about a third or more of the UK private sector for 6 months at least, and ongoing. So does that have any bearing on what we're discussing in terms of implementing a wealth tax or not?
That takes you back to the messaging again, or the purpose and the message. You know, if the message is, look, we need to raise the money somewhere, guys, then a penny on tax is probably what people will do. If you call it a wealth tax, that's a politically divisive thing. As you saw in the YouGov survey, most people would vote for a wealth tax as long as they're not in the band. Yeah. So what is it, 750,000? I think they said was the number.
Yeah.
Most people will tick the box and say, yeah, let's do it. But the reality is it won't raise an awful lot of money. Whereas the real source of money will come through income tax or national insurance contributions, I guess.
Could I don't know if I'm just thinking of Theresa May. I remember Theresa May and her dementia great tax, and that really harmed her. Could a similar thing happen to this government and Boris Johnson if there was such a visceral, emotional reaction to the wealth
tax? Is another example of it. If you get your message wrong, you're in trouble.
Absolutely, because there's several people out there that have high value assets, you know, particularly sort of like in terms of property values, but they're not necessarily cash rich. Yeah. And you know, and you know, I mean, in my world, that's sort of a lot of elderly retirees who live in large homes that they've bought at a different time and saw the value of those sort of skyrocket over time. Are you really just going for that with a wrong messaging? You do start upsetting a lot of people, for sure.
You also want to do it on a basis that there's a system there that works already, and you know, VAT or national insurance contributions or income tax systems work very well. If you have to go down the road like Dennis Healy found of trying to build something, it probably costs you more than the money you're collecting. So rather than introduce a new tax, it's much more likely, if they're going to do this, is they'll dress it up in a different way, not call it a wealth tax, and just move the existing rates, whether it's capital gains tax to income or whether it's income. That's personally, I think that's much more likely, and not a wealth tax.
No, I'd certainly agree with that, and certainly if you can see the capital tax reform, no one would really the OTS proposals are fairly benign in relation to IHT. The all-party parliamentary group proposals are a little more radical. If you mix that in with the CGT reform, which will get headlines and saying, look, we're putting it on the shoulders of those who are best able to bear it, but not annoy that many people. But also, it won't generate masses of money. I mean, if you doubled IHT, it would generate another 5 billion. Double CGT, which linking it to income tax rates would, and we've done that before, that pushes it up 20 billion. But then you sort of got to give some indexation relief with that as well. But I think a bit of that, and then the broad base 1p from everybody type thing with a little bit more on high rate, then you get closer to it over time. I mean, we don't have to get it all in 1 year, do we?
You just generation to pay it. They're making the generations paying the contribution rather than kicking the road to the student generation who already got debt.
Yeah, no, quite. You can see actually with the wealth tax and liquidity issue. I was just thinking last night. You think, well, you could, if you've got a house and you want to tax it, you could sort of create a gradual debt. And you get tax out of something on wealth when an event happens, with capital gains, when you sell something, and with inheritance tax when it passes to someone. So effectively, then that's just like increasing the rate of inheritance tax, isn't it? But that wouldn't sound good either politically, would it? So we'll call it something else. Yeah, there's a range of things. But the thing to bear in mind here on will it, I think, is also, I know it was only an answer in Prime Minister's question time, but Boris Johnson quite clearly resisted and gave a very clear message of we won't introduce a wealth tax in that answer on the day of the summer statement when Annalise Dodds made the point about a wealth tax. And he completely shot it down and said, we won't do that. And it's the Labour Party who are behind this kind of thing, not us. I mean, again, I know U-turns are the thing, but he made that was the most clear reference point, albeit only as an answer in Prime Minister's question time.
But you can have it by dressing it up in a different way.
Dressing it up, absolutely. Because at the end of the day, if you want to get the money in, it doesn't really matter what you need to dress it up so that you get your end result. To your point of what is the point of the tax? What is the aim? What's the objective? Yeah, definitely.
Okay, no, that's really interesting. So messaging and communication is a key for any tax issue. And messaging and communication has certainly been a theme for government during this crisis, albeit maybe not a very encouraging or inspiring one. When we come to actually financial advisors and the grassroots level, let's say for argument's sake that the government was going to introduce some type of wealth tax. What can advisors practically do for their clients? How can they prepare them for it? How do advisors say handle the emotion of that subject with a client?
Michael, I think that's fairly straightforward. So I think let's caveat right now, this is all speculation, right? The UK government has not committed to a wealth tax, as Tony well said, in fact, has denied the fact that they would even do something like this. But going with your example, if they were to do so, when we have more clarity around the government's intention on this, I think financial planners can add tremendous value to clients, because what we can do is show the clients how this wealth tax might affect their financial plan, if at all. So, you can let them come to that conversation with their emotions and with all the baggage, for the lack of a better term, that they've absorbed through the press or through, television, etc. But then you can actually demonstrate to them from a financial planning perspective, look, you don't need to react to this news, which is what normally causes people to make mistakes. Here's the plan, and this is how it's going to affect you, if at all. And these are some of the things that we can do about it. So again, a planning conversation, what it does is it allows us to, as planners, to hear out the emotions and then work with the client to say, okay, I've heard you, I empathize with that. Can I put that to a side for a second? Now let's actually see how this filters through to your financial plan, if at all.
Isn't it an excellent opportunity for the planning community to dust down the portfolio of clients, making sure everything's running to the maximum, whether it's ISAs, pensions, inheritance tax planning, the next generation, linking it up. I mean, many advisors don't work with the next generation. Here's an excellent opportunity to open up the debate for, well, if something like this occurs, how do we work to pass on wealth to the next generation? So I think there's fantastic opportunities for financial planners to coach their clients through the myriad of changes that might come.
What do you think, Kusal? Do you think that advisors, that it would be easy for advisors to handle it? Or
I think when it comes to inheritance tax, this is a key message we use, because financial planning, I mean, people talk about financial planning and everything. It usually comes to a particular product and its implementation. That is not really financial planning. The real planning is what I've experienced now with this intergenerational stuff, is making people understand that when you leave this planet, you will simply take what you first came with. And there's no point accumulating vast estates, building legacies, etc., unless you can live that benefit now, because you won't take anything. There'll be no attachments, and it doesn't really matter. What people want to do is to contribute to society. Nobody said, oh, I don't like these income taxes. I want a reduction in income tax. They want to actually pay more. They make proactive charitable contributions. But when they see this reality that they are sitting on a sizable estate, paying management fees, paying all sorts of fees, with this prospect of an inheritance tax burning on their children or their grandchildren, whilst those same subjects are paying interest rates or rent or mortgage payments to third parties, what really is the purpose of all of this going on? Because there's detriment from both sides. So it's the planner's job to explain, if you really want to establish a purpose, tell me what happens the day you pass away. Where does everything go? What is your real legacy? Why is it that we have all of this now when the other people are paying so much? And that's when they begin to say, or to reveal, that as long as there's that safety within the plan that they're looked after, they're more than happy to gift it out. So if there is any additional wealth tax, which we already do with inheritance tax, my advice is to gift money now and direct, rather than hanging into things, because it really doesn't matter when people pass away. They don't really care.
Okay.
Interesting point. Yeah, I know. I certainly largely agree with everybody. Really, I agree with everyone. I think Amyr's point, John's point, that it's just so important. This point of planning is there's a good example right now. I think we've had probably both of you, all parties contributing. They've had questions around, should I do anything about CGT? We've had a couple of questions through clients of ours, through advisor clients of ours, with clients saying, shall I sell down in case CGT gets linked to income tax? And you go, would you do it anyway? No, I wouldn't, but I don't want to. So that kind of balanced view that Amyr really well expressed, to just say, just wait a second, take the emotion out of it. Now let's just think about this before we do anything. And I think that's the thing. We wouldn't advise anything. Wait and see if there is a plan, and then in a balanced, calm way take it. So that isn't added anything more. It's just not said it as well as everyone else has just said. The plan is absolutely critical to this. To be the point, I think it is important to be ahead of the game, though, to have a view on something. Clearly, all three people who do planning here have a view on that, so that a client feels they can have a decent conversation, even though they don't need to take any action. They feel reassured. They feel reassured in not taking any action. Because I think the anxiety comes from, should I be doing something now? Should I have missed an opportunity? And that discussion with a financial planner if they're a good planner, takes away that anxiety. You say, no, okay, I've got your back, basically. That's our role.
No, that's a really good point. In terms of reassuring the client, to what extent is there a danger of advisors and or their clients potentially taking some action based on the fear of avoiding a wealth tax, which actually never happens?
It's huge, especially for do-it-yourself investors. It's huge, and it's the same risk that do-it-yourself investors take with any other noise that lives around the financial services sector, and there's a lot of it. There's heaps of it. All you need to do is turn on the television to see or read any newspaper to see what the crisis du jour is. And you know, look, I think that is, we're speaking in our own bubble here. Of course, the theme of this is all around our sector, financial services. I'm sure it's the same for any other sector. I'm sure if we went to a dentist's roundtable, there'll be some noise around, you know, Invisalign teeth things that a lot of people get wrong because they try to go onto a do-it-yourself strategy rather than really work with a professional that can help them. So to your point, Michael, the wealth tax is just another opportunity for people to react to a bit of news or a lot of news, as it may be, depending on the messaging, and unfortunately make mistakes. And you know, what folks need to realize is sometimes the cost of a big mistake vastly outweighs what the cost of working with a financial planner would be.
Sure.
I mean, totally. I can certainly, from just only a few months back when the wealth tax discussion was a little more noisy, there were people considering what could I do if a wealth tax came, what could I do? To Kusal's point, make gifts away, but you'd need to fragment it, otherwise you're just passing on the wealth tax to another person effectively. Or people, the biggest number of questions we had were worry about some form of exchange control, or, you know, sort of capital controls of being able to move my money out of the country. That was more Labour government fear of capital controls. But I think, so the only way, strictly speaking, you go give it away and fragment it. When you look at practically, if there were to be something, but let's wait and see if there were anyway. PS, it's unlikely, I think, under this government. And then the only real way is to say, you know, leave the country, because just having your wealth somewhere else, in the countries that do have a wealth tax, they tax your global wealth, not just wealth within that country. So you need to move the body as well as the wealth.
But
here's one for you, Tony, maybe, because there was this whisper several years ago when Cameron was in the last election that Labour were about to introduce the 1970s rent tax, because there is this problem where there's part-time landlords owning a couple of properties here and there and crowding the market so that people can't become first-time buyers. So they were thinking about bringing in the rent tax. To counter that, the Conservatives came up with an alternative strategy, as you know, which is restricting the tax relief, which has immediately meant that some people through the back door have had to realize, well, actually, this doesn't make any sense. So they're selling those properties. They've realized it doesn't make financial sense. Do you see anything like that happening? A backdoor way of getting people to solve a problem, such as the property market?
I don't think so. Within not any, I think the pathway has been set with the property market, and it's tough enough as it is. And I think it's interesting when you see, even with the wealth tax, back to sort of subject, that most people in that FT service seem to, when you looked at which assets do you think it will be most appropriate and fair, most people are lighted on second properties. You know, not a main, but it was second properties, and that's what it comes down to really. And properties that you don't live in, so either you rent out or they're a holiday home, then they are the ones that should be attacked. And there's been a pretty strong attack on those. So I think to change strategy on something that's already working, so to speak, is probably unlikely.
And that's going to come under pressure, because everyone's saying the housing market is booming at the moment, as we know, in the run-up.
Yeah, good point. Great.
That's really getting hit is low-paid workers, young people, people in the hospitality and event sector, usually are they're the renters, aren't they? So there's a fair chance that they're the people who are going to face into unemployment, and therefore the private landlords or the accidental landlords with 2 or 3 flats might find they've got defaulters on their hands. So that whole sector could be coming under a lot of pressure quite soon. They mostly pay interest only on these flats and things, property that they own, and they can ride it out for a little while. But if this thing goes on for a long time, I see it potentially that sector could have structural problems.
And the sector that lent money to them on an interest-only basis, of course.
Absolutely. So there's lots of unintended consequences going on here.
Yeah, no, absolutely, definitely
so. Just a final question. I know that, but with the, I'm just bringing back to a potential wealth tax. If it's harder for people to travel and harder for people to leave the country, is it easier for government to get their stuff with a potential wealth tax?
It's a good point. If you had a national
Because
lockdown and a block on any travel whatsoever, then, as we said, the only way to properly avoid wealth tax, if wealth tax were applied
to move
all
abroad, but it is technically it is harder to move abroad now, or it is harder to travel at least. I mean, since within flights and everything.
I'm sure the most wealthy would tend to find a way to do that. Your private jets and stuff.
That's the best way out of it.
Yeah.
Well,
No.
you're staying, Tony, aren't you? You're staying in the country.
Yeah, we're here. Got me season ticket. And me £14.95 box office per match to watch you lose at home to Leicester. Yeah, right. Sorry, no, seriously. Yeah, it's a great point. I suppose if you can't travel, then you. But how long can that last for? I mean, that's really, if we're looking at this, probably no wealth tax introduced till after if there was even one, and it's highly unlikely, I think. And that's sometime next year. Hopefully the pandemic's over. Hopefully there's something, there's more normality restored, in which case travel is not going to be banned forever. You can't stop traveling forever.
I just know that I've heard everyone talk about when we get a vaccine. I never heard anyone say if we get a vaccine. It's always been when. And it seems a fairly, I mean, I'm not a doctor or scientist, but it seems fairly big. There's assumption. There's a big difference between when and if.
Even if we get a vaccine, the virus will probably not go away. So we're probably going to have to learn to live with this thing.
Absolutely, couldn't agree.
The latest vaccine they've got is actually causing mutations within the virus, which we don't know what the secondary implications of those are going to be. I mean, the entire concept for me is like,
We live with flu, don't we?
Causes mutations in a virus, and then. Okay.
Well, they reported this morning that 80% of the cases in the UK are mutating from Spanish. Yeah, so happy days.
Happy days indeed.
So it takes you all the way back to the role of financial planners is to be reassurers and coaches to the customer base.
And that's the thing where I think what happened with COVID is that people really divorced from the finances. People who were established, they were like, look, we've got family to look after. There are far more important things to do now than think about money. Whilst on the other side, the people who were financially highly vulnerable with the job losses and everything, they suddenly paid more attention to their money. This is why with any scenario, it's a great opportunity for real planners to really empathize and understand what the purpose of all of this is. And if we convince people or have a meaningful discussion of people about what really is the purpose of all this wealth,
what's the plan?
Actually realize, actually, this doesn't matter. I mean, somebody sent me that because I'm into all these historic property. They sent me this Facebook group called Abandoned Properties. I was like, I went to have a look at some of the property. These are mansions, amazing, lovely properties built not so long ago, and they're completely derelict and abandoned. And I'm thinking, what a complete waste. So people, me personally, I am not going to leave any estate or luxury items. I'll leave experiences and knowledge. That's me personally, but everybody's different.
Sure.
Yeah. No, I think that's a very, very good point. Is there anything else that any other point that any of you would like to cover or go over again?
I would just Lyndon say, I think it's a fascinating time because, to the point made right at the very beginning, politically, it's really interesting that we've got a Conservative government that's done so much with furlough and all that, pouring money into the economy. And I really wouldn't like to be in the cabinet table having to resolve the economics of it, of trying to come up with taxes and not call them wealth taxes, and yet solve some of the problems. The Chancellor's got to find money to put in the pot, and he's got to get it from somewhere. So that's the big exam question to take.
And at the same time, John, to your point, what the government also need to do is continue encouraging the UK to be seen as a country that is strong, that has a superb first-class legal framework for other companies to come in and actually help generate wealth through entrepreneurialism. After all, after Brexit, that's it, right? The UK needs to be attractive to the biggest, best financed, most well-staffed companies in the world.
Brexit, didn't they? Somebody had to go and spoil it and mention Brexit.
Yeah, I know quite. But having a regime of high taxes, corporate taxes especially, doesn't do that. I'm totally with you on that, Amyr, that we need to remain attractive, and also, but we do need to have that stability to our finances for our world partners, buyers of government bonds, going, actually investing in this country, do they have a plan? You know, so it's an interesting balance. Back to John's point, yeah, I wouldn't want to be at that table. It's a very difficult one. I suppose all they can breathe a little sigh of relief is the IMF have said it's all right to push it, you know, kick the can down the road till next year, till after Christmas. We'll deal with it then, kind of thing. And I completely sympathise with that, really.
I think it was the Romans that coined the phrase bread and circus, and 2,000 odd years later, we're still here, bread and circus.
Exactly. What the Romans have done for us.
Yeah, no, that's absolutely terrific, everyone. Thank you very, very much for your time. Any final points? Or
all good, thank you.
Sorry to offend anybody who thought Trident was a vital necessity.
That's great.
Nuclear.
Love that. That's a perfect note on which to end.
Yes.
That's great.